Hello, I'm James and thanks for joining me on Kalkine TV for Smart Market Insights. And in this edition, I'll take a look at how rising interest rates are set to affect mortgages. Inflation is at record levels in Australia. Global supply chain issues, ongoing effects of the COVID-19 pandemic, the Russia-Ukraine conflict, Australian floods and many other significant factors have led to a tremendous rise in prices of goods and services across the country. To combat mounting inflation, the Reserve Bank of Australia recently lifted the fixed cash rate in the country by 50 basis points to 1.35%. An increase in interest rates is a technique adapted by federal banks to limit cash flow in an economy so that demand falls and, as a result, the price level also falls to help the market reach economic equilibrium. The Australian Central Bank has increased the national interest rate 3 times this year alone. With prices remaining at high levels, Aussies are now speculating how a further increase in the interest rates will affect their mortgages. So let's take a look at some important factors of this development. After 2010, the Reserve Bank of Australia increased the rate for the first time from 0.1% to 0.35% in May 2022. In June, the rate was lifted to 0.85%, which has now been raised once more to 1.35%. According to economists, this rate hike is expected to increase monthly repayments by $119 for an Aussie mortgage on a home of around 450,000 Aussie dollars. But it doesn't stop there. According to various economists, inflation is expected to rise earlier than expected. As a result, it's anticipated that interest rates will likely increase at a higher and faster pace in coming months. Housing prices in some states have fallen in the last couple of months. However, on average, prices still sit 25% higher compared to prices of housing prior to the pandemic. Accordingly, mortgage repayments will be increased in the upcoming months to manage the inflation rate. Economists suggest that in recent months, mortgage repayments will still remain sustainable. However, it will become more challenging as we move towards the end of 2022 and enter 2023. Additionally, it's not guaranteed that a consistent rise in interest rates will actually substantially decrease the prices of essentials because there are many global factors still at play. With lettuce reaching more than $10 a kilo or per lettuce in supermarkets and the housing crisis persisting, affordability woes for Aussies are set to continue for some time yet. Alright, that's all for this edition of Smart Market Insights. Another episode is coming your way tomorrow, or should I say on Monday. Until then, make sure to keep it locked here on Kalkine TV for the latest market insights and business news. I'm James, signing off for now.